Hey guys, welcome back to another video. Welcome back to Wallet Insiders, and in this video I'm going to be showing you guys 5 ways to invest $1,000. Now this video is not limited to who may be working in 9 to 5. If you're a high school student or you just have $1,000 laying around the house, this can also work for you. Alright, so without any further ado, let's dive right into it. So one of the more popular ways to invest is by buying stocks. And what a stock represents is ownership in a company. And if that company performs well, the value of that stock increases as well, which means that your initial investment has just increased. One of the advantages of investing in stocks is that they usually offer high returns in the long run. However, they can be volatile, which means that they can be significantly risky when trading. So this is something that you need to seek financial advice or from someone who is experienced in that field. To minimize risk, what you can do is invest in a diversified portfolio of stocks or mutual funds. We're going to dive into another video on what mutual funds are. Another way to invest $1,000 is by buying bonds. And what bonds are is that they are loans made to companies or governments, and in return they give you interest on your investment. Now, compared to stocks, bonds are lower risk, and in that regard they are also lower in returns. To get higher returns, you'll need to invest in high yield bonds or junk bonds, and these bonds carry higher risk but they also yield higher returns. For example, a high yield company would be a company with a lower credit rating, and they would offer a higher yield compared to a more established company like IBM. So number 3 on our list are mutual funds, and a mutual fund is basically where a group of investors come together and they pool their resources to invest in a variety of stocks. And one of the great advantages of a mutual fund is that they offer diversification, which basically lowers your risk upon initial investment in said mutual fund. So to choose the best mutual fund, you need to consider the fund's objectives and also the fund's fees. A popular example of a mutual fund is the Vanguard Total Stock Market Index, and that fund is a popular fund that invests in a diverse range of stocks, and they also offer low fees, guys. So guys, number 4 on our list are cryptocurrencies, and cryptocurrencies are digital currencies that use cryptography to secure their transactions and control the creation of new units. One of the advantages in investing in cryptocurrencies is that they usually offer high returns on investments. To invest in cryptocurrencies, you should really research the various types of cryptocurrencies. For example, Ethereum, Litecoin, or the most popular out of all, Bitcoin. You should also consider the risks that are associated with various types of cryptocurrencies, because a lot of them are subject to hacking, fraud, and a lot of nefarious criminal activities. So definitely give a lot of consideration towards that when investing in a type of cryptocurrency, guys. So guys, number 5 on our list are savings accounts, and savings accounts are bank accounts that offer interest on money that you invest into that bank. One of the advantages of investing in savings accounts is that they usually have low risk and guaranteed returns. When investing in savings accounts, you need to consider the interest rate that bank offers, fees that comes with those accounts, and the minimum balance requirement for that account. For example, a account that has a high yield interest rate, those type of interest rates are usually offered by online banks compared to a physical brick and mortar bank. They would usually offer a lower interest rate for their customers. And that was our 5 ways for investing your $1,000. Now remember, it's important to do your own research and consider, most importantly, your risk tolerance when investing. Also remember, by diversifying your portfolio, it reduces your risk. There are a lot of asset classes out there, and what might work for Tom might not work for Harry. So ensure that there is due diligence when investing your money. So guys, that was it for today. It was great talking with you guys today, and I will see you guys in another video. Peace out.